Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're diving into the details of Alphabet's Q2 2025 earnings call. Our mission, as always, is to sift through the data, extract the most important insights, uncover surprising facts, and help you quickly become well-informed about the company's performance and strategic direction. Especially, in what feels like an incredibly fast-moving technological landscape, we want to give you a shortcut to understanding the profound shifts underway, particularly with AI really taking center stage.
Absolutely. And this Q2 2025 earnings call, it isn't just some routine financial update. I mean, it provides a really fascinating, comprehensive snapshot of just how rapidly AI is transforming things. Not just a major tech company's operations, but its actual financial results, too. The sheer depth of data and the strategic clarity we'll be exploring today, it truly underscores the scale of Alphabet's ambition and their, well, pretty impressive execution in the AI space. It's a quarter that really crystallizes their whole AI-first approach.
Okay, let's start with the big picture then, because Q2 was, well, without a doubt, a standout quarter for Alphabet. What really jumped out at me was the robust growth seen across the entire company. It became crystal clear that AI isn't just a buzzword for them anymore. It's the central driving force behind all this momentum we're seeing. Consolidated revenue hit an impressive $96.4 billion.
96.4 billion, yeah.
I mean, to put that in perspective, that reflects a remarkable 14% year-over-year increase, or a very healthy 13% when you factor in constant currency, which beat analyst expectations. This growth is particularly noteworthy when you consider some other tech giants are seeing more moderate gains. It kind of signals a growing market confidence, specifically in Alphabet's AI-first strategy, wouldn't you say?
I think so. And what's truly fascinating here is how management talked about their full stack approach to AI. That really seems to underpin this success. This isn't just about investing in one isolated piece of the puzzle. It's an integrated, cohesive strategy that covers every single layer,
Mm,
right from the foundational infrastructure all the way up to the user-facing products.
right.
So that means massive and continuous investments in cutting-edge AI infrastructure, doing world-class research, developing and refining their own models and tooling, and then, crucially, deploying these advancements into that huge array of products and platforms that reach users globally. It's a very holistic, vertically integrated view. It lets them maintain control and optimize performance at every single step.
So when they say full stack, they basically mean owning the entire pipeline, from the raw research and the basic compute all the way to the apps and services we use every day.
Exactly, that's the idea.
That's a huge undertaking.
It is, and this integrated strategy lets Alphabet optimize across the entire AI pipeline in ways that, more horizontal players just can't match. They're not just buying compute or licensing models from outside. They're developing, refining, deploying them from the ground up, really tailored to their own needs and users. And this creates this powerful, virtuous cycle of innovation and efficiency.
Okay, a virtuous cycle. How
Yeah.
does that work in practice?
Well, insights they get from real-world product use can feed directly back into the fundamental research, speeding up breakthroughs. And similarly, infrastructure improvements, like maybe new chip designs or data center tweaks, can immediately benefit model development and product performance. It just makes the entire ecosystem stronger, faster, more efficient. It's a truly unique advantage, really hard to replicate in this AI race, allows them to move incredibly fast.
And the financial results reflect this broad strength too, right? It wasn't just one segment carrying everything. We saw double-digit revenue growth across search, YouTube ads, subscriptions, platforms and devices, and Google Cloud. That's really broad strength.
It really is a healthy spread across the portfolio.
Yeah, and on top of that, note income soared by 19% to $28.2 billion. Earnings per share up 22% to $2.31. Those are some pretty serious numbers. Shows effective management, strong execution.
Absolutely.
Okay, let's really dig into the core of Alphabet's AI strategy then. Starting with those foundational elements, specifically their AI infrastructure. What we're seeing is this commitment to building out a leading global network of AI-optimized data centers and cloud regions. They're really putting their money where their mouth is.
Big physical investments, yeah. Expanding that global footprint.
And what seems to set them apart is offering the industry's widest range of their custom AI chips, the TPUs, alongside the standard GPUs. TPUs are kind of Google's secret sauce, right? Specialized processors just for AI tasks.
That's right, designed specifically for AI, giving them a significant efficiency and performance edge, especially for training and running those massive complex AI models they have. And these are coupled with highly specialized storage and software. It creates a really optimized environment.
And the proof is in the pudding, as they say. The numbers seem compelling.
Yeah, they are. Nearly all of today's Gen AI unicorns, the fast-growing startups defining the next wave of AI apps they're choosing to build on Google Cloud. And that's not just marketing fluff, it's a profound strategic advantage.
How so?
Well, by being the foundational infrastructure provider for these innovative companies, Google basically gets a front row seat to the future of AI. It fosters deep partnerships, potentially locking in long-term loyalty and revenue as these startups scale up. Even leading AI research labs like Safe Superintelligence and Physical Intelligence are specifically using their TPUs. That's a powerful third-party endorsement of their hardware.
Right. And they're pushing boundaries with storage innovations, too, designed to speed up AI performance. I saw something about Anywhere Cache.
Yeah, Anywhere Cache. Designed to improve inference latency, basically how fast the AI responds by up to 70%, which is absolutely crucial for things like conversational AI, instant search results, real-time applications.
Makes a huge difference to the user experience.
Totally. And then there's rapid storage, which they claim delivers a 5 times improvement in latency compared to other big cloud providers. These aren't small tweaks. They're fundamental improvements to the underlying performance. Plus, they've optimized core AI software packages like PyTorch and JSX with full open source support. So developers have the best tools to leverage their infrastructure. It's this comprehensive approach that really lets them scale their AI ambitions.
Okay, and on the research and models front, this is where the intelligence is actually forged, right?
Indeed. This is where the magic happens, so to speak. They continue to aggressively expand the Gemini 2.5 family of hybrid reasoning models. And when we talk hybrid reasoning, these aren't just single-purpose AI brains. They blend different types of intelligence, logical deduction, creative generation, complex problem solving, allows them to tackle incredibly sophisticated multimodal challenges. And these models are consistently noted for industry-leading performance on benchmarks.
So always pushing the performance envelope.
Constantly. And beyond their flagship models, they've improved their workhorse model, Flash, and debuted an extremely fast version called Flashlight for speed-critical stuff.
And the Math Olympiad thing. That was genuinely remarkable.
Wasn't it? An advanced version of Gemini, paired with something called DeepThink, achieved gold medal level performance. We don't know the full details on DeepThink yet, but it seems like a sophisticated reasoning framework letting Gemini perform at a near-human level on really complex problems. And they said they can't wait to bring DeepThink to users soon. That hints at some pretty profound future capabilities for all of us.
Wow. And VO3, the video generation model, that seems to have taken off.
Oh, big time. A viral hit, apparently. Over 70 million videos generated by users since May. That's huge engagement. And they're integrating this highly capable model right into the Gemini app and their new AI filmmaking tool, Flow, empowering creators. Plus, they rolled out that new feature letting Google Photos users turn static photos into dynamic videos. Shows how fast these advanced models are getting into everyday products.
Okay, now here's where it gets really interesting for us as users. How is all this incredible AI power translating into actual product usage? The numbers you mentioned earlier are just astounding. They said 480 trillion monthly tokens back in May.
Which was already mind-boggling, yeah.
But since then, they've doubled that to over 980 trillion monthly tokens.
Over 980 trillion. It's an almost exponential increase in just a couple of months. Signals massive accelerating demand for AI compute.
And the Gemini app itself, growing strongly.
Yep, more than 450 million monthly active users now, and daily requests growing over 50% just from Q1. You see the real-world application everywhere. Like in June, over 50 million people used AI-powered meeting notes in Google Meet, streamlining workflows. And Google Vids, the new short video product in Workspace powered by VO3, hit nearly 1 million monthly active users already. Rapid adoption.
And new Android features at Samsung Unpacked too. Deeper integration coming.
That's right. And maybe most telling for monetization, subscriptions got a boost from their Google AI Pro and Ultra plans. Shows people are not only using these enhanced AI features, but are actually willing to pay for them.
Okay, that brings us squarely to search, which is clearly undergoing this incredible fundamental transformation. It's not just about typing keywords anymore, is it?
Not at all. AI is fundamentally expanding how people search and access information, allowing for completely new types of questions, new interactions. And crucially, they're still seeing continued year-over-year growth in overall queries and commercial queries.
That's important. So the new AI stuff isn't eating into the old search volume.
Exactly. It seems to be significantly contributing to incremental usage, especially among younger users. They're searching more often as they realize search can now meet a much broader range of needs. It's expanding the whole market for search itself.
So making search more capable, more intuitive. What specific AI features are having the biggest impact right now? How are they changing behavior?
Okay, let's break that down. First, AI overviews. These have been incredibly popular, driving over 10% more queries globally for the kinds of searches where they show up, and that growth is apparently still increasing week over week. They're powered by Gemini 2.5, optimized for speed, delivering the fastest AI responses out there.
Makes them feel snappy, useful.
Exactly. Then there's AI mode that's described as an end-to-end AI search experience, getting really positive feedback, especially for longer or more complex questions where people want synthesized info or brainstorming help. It's still rolling out, but already has over 100 million monthly active users in the US and India.
100 million already.
Wow. And they plan enhancements like deep search for really complex queries and more personalized responses. These aren't minor tweaks, they're fundamental shifts.
I'm particularly fascinated by this rise of multimodal search. Moving beyond just text feels like a huge step, like a search engine can see the world through your phone camera.
It absolutely is a massive step forward. They're seeing strong growth there, especially when users combine visual input from Google Lens or Circle to Search with the AI overviews. And this growth is most pronounced among younger users. Indicates a real foundational shift in how the next generation engages with info. Google Lens searches are among the fastest growing query types, up a staggering 70% year over year.
70%.
70%. And most of these are incremental searches, entirely new interactions, even seeing healthy growth for shopping queries when people point their camera at stuff.
And Circle of Search is everywhere now, isn't it? That seamless searching of what's on your screen without leaving the app. That must be a game changer for convenience.
It genuinely is. Over 300 million Android devices have it now. Makes it incredibly pervasive. It lets users explore complex topics, ask follow-up questions without that friction of switching apps or copy-pasting. The example they gave of mobile gamers using it mid-game to get AI overviews about characters or strategy without pausing, that really highlights the in-the-moment usefulness.
Reducing friction, making info access just there.
Ubiquitous and contextual, yeah.
So, connecting these innovations to commerce seems key. How are they bringing these AI capabilities into the shopping experience?
They're clearly thinking big about commerce. They just launched a new agentic capability in search for all US users. And agentic means the AI can not only give info, but actually take action for you.
Like booking things or making calls.
Exactly. This new feature allows AI-powered calling to local businesses directly from search, handles tasks like booking appointments, checking store hours. Imagine no more phone trees. Beyond that, in Q2, they introduced a virtual try-on experience for Search Labs users in the US.
Virtual try-on. For clothes.
Yep. Lets people virtually try on billions of clothing products, see how items look on different body types. Early results are extremely positive, especially with Gen Z. They plan to roll this out to all US users very soon.
That's pretty cool, blurring the lines between online and offline.
Totally. Bringing the offline world, physical stores, clothes, conversations into the online world like never before. Combine that with their AI translation capabilities, and it expands access to content globally, helps businesses reach more customers, really expands the whole market.
But the big multi-billion-dollar question, monetization. How does all this AI innovation translate to revenue in search, especially if AI overviews might reduce clicks?
That's the critical question, and they addressed it directly. They clearly stated that monetization is seen at approximately the same rate for AI overviews as for traditional search results.
Okay, that's huge. That alleviates a major fear that AI would kill the ad golden goose.
Exactly. It provides a strong base. They can now innovate and drive entirely new ad formats native to these AI responses, could unlock significant future monetization. They emphasize the focus is on driving positive outcomes for users and good ROI for advertisers, not just chasing clicks and CPC targets. Paid clicks were up 4% year over year, which is healthy, but they noted many factors influence that metric. The core focus is value creation in this new AI world.
Got it. Okay, let's shift focus to Google Cloud. Another stellar quarter there, really cementing itself as an enterprise AI powerhouse. Strong growth in revenues, backlog, profitability. Its annual revenue run rate now exceeds $50 billion. That's a massive milestone.
Huge milestone in cloud computing. Reflects sustained enterprise adoption. And the demand for their AI portfolio is backed by some really impressive stats.
Like what? What stood out?
Well, the number of large deals over $250 million actually doubled year over year, shows bigger commitments from major clients. Even more striking, in just the first half of 2025, they signed as many deals over $1 million as they did in all of 2024.
Wow, that's serious acceleration.
It really is. New GCP customers increased nearly 28% quarter over quarter, sign of robust pipeline conversion, market share gains, and crucially, more than 85,000 enterprises, including big names like LVMH, Salesforce, DBS Bank, are now building with Gemini. This drove a phenomenal 35x growth in Gemini usage year over year within Google Cloud.
35x growth.
35 times. Indicates not just adoption, but incredibly deep and expanding integration of their AI capabilities at the enterprise level. It's a powerful shift.
And it sounds like AI agents aren't just theoretical anymore. They're deeply integrated, providing real-world value. Can you give some examples?
Absolutely. Concrete benefits across different industries. Mayfair, the luxury retailer, is using databases with cloud AI to streamline data pipelines, deliver hyper-personalized customer experiences. Mattel is using Gemini-powered data agents with BigQuery to review product feedback much faster, accelerating their product cycle from months down to weeks. Target's improving cybersecurity with Gemini-powered threat intelligence and security ops agents, detects and responds to threats much faster.
Protecting data, protecting operations makes sense.
Yeah. Capgemini, the big consulting firm, is using AI software engineering agents to deliver higher quality software faster by automating things like code generation and testing, more efficient client projects, and maybe one of the most tangible examples, BBVA, the global bank, saving employees nearly 3 hours per week by automating repetitive tasks with Gemini and Google Workspace, and that's rolling out to 100,000 employees globally. Real direct boosts to enterprise productivity.
That's incredible impact. And beyond these individual uses, are they building a broader AI agent ecosystem, fostering a community?
They certainly are. They know the real power lies in an open, collaborative ecosystem. They introduced an open source agent development kit, already over 1 million downloads in less than 4 months. Huge developer interest. They also launched AgentSpace, an open, interoperable enterprise chat, search, and agent platform designed to integrate various AI capabilities and data sources.
So businesses can build custom agents that work together.
That's the idea. Gordon Food Service is bringing AgentSpace to its U.S. employees for better decision-making, accessing integrated info and automated workflows. And remarkably, over 1 million subscriptions were booked for AgentSpace, even before its general availability.
Wow, serious pent-up demand. Shows real confidence from businesses.
Deep confidence in AI agents as a transformative tool, yeah.
Okay, let's turn to YouTube. Still showing strong revenue growth, really diverse offerings. Nielsen data keeps showing YouTube leading U.S. streaming watch time over 2 years now. Hit a record 12.8% of total TV viewing in June 2025.
That's impressive staying power.
And it's fascinating seeing that demographic shift. The generation that grew up watching YouTube on phones is now watching more on TVs, expanding into the living room. Plus, billions of sports fans consuming over 40 billion hours of sports content annually there. And they've got that NFL Friday game from Brazil coming up.
Shows their global reach and ability to get premium live content. But YouTube Shorts, specifically, is having a moment. Really remarkable performance. It's now earning as much revenue per watch hour as traditional in-stream content in the US. In some countries, even more.
That's a huge milestone for short-form video monetization.
Absolutely. Proves its viability as a major revenue driver. They're averaging over 200 billion daily views on Shorts. Staggering scale. And AI is critical here, improving recommendations, auto-dubbing, dramatically increasing potential audiences for creators and brands. Plus, they've rolled out new AI tools specifically for Shorts creators, making content creation easier, more creative.
And the advertising side of Shorts, how's that evolving?
Seeing healthy increases in both ad volume and price, especially in developed markets. Shows growing advertiser appeal. Supported by native ad formats, AI-powered ad creative resizing for different screens, better targeting. All leads to better campaign performance. The McDonald's USA example was great, using Shorts partnership ads for their Minecraft meal campaign. Got a 3.3 times higher view-through rate than the benchmark. Shows the platform's effectiveness for big brands.
Impressive results. And beyond Shorts, YouTube seems focused on diversifying overall revenue streams too, right? Not just traditional ads.
Yes, that's key strategically. Multiple growth avenues. They reported 13% growth in overall ad revenues, mostly driven by direct response, then brand ads. They launched the Creator Partnership Hub via Brand Connect, makes it easier for brands to work directly with creators, streamlining collaboration. And we heard how VO3, the photo-to-video feature, generative effects, they're making content creation easier for everyone, opening new creative avenues.
More content, more engagement.
Exactly. And strong momentum in connected TV. CTV, over 1 billion conversions from YouTube ads viewed on CTV screens in the past year, thanks to features like CTV shopping ads with QR codes seamlessly bridging viewing and purchasing. And they're expanding Premium Light to 15 new countries, underscores their sophisticated double-tier strategy, blending ads and subscriptions to capture different audience segments. Very smart.
Okay, let's briefly touch on Waymo, under other bets. Still scaling, expanding its autonomous driving, recently launched in Atlanta, doubled its Austin territory, expanded LA and SF Bay Area territories by about 50%. Rapid geographic growth.
Not just incremental steps, yeah, accelerating the footprint.
And they launched teen accounts in Phoenix for 14 to 17-year-olds. That's interesting. Building loyalty with the next generation, maybe?
Could be. It also shows confidence in the safety for a wider demographic. And the stats on Waymo's achievements are foundational. The Waymo driver has now autonomously driven over 100 million miles on public roads.
100 million miles. That's a massive data set.
Huge.
Yeah.
For refinement, safety validation, regulatory approval, creates a significant data moat hard for competitors to match. They're testing in over 10 cities this year, including complex places like New York and Philly, helps refine the tech for diverse scenarios. And despite the other bet segment losing $1.2 billion this quarter on $373 million revenue, Alphabet is clearly allocating more resources there.
Playing the long game.
Exactly. Long-term investment in potentially transformative tech. Willing to absorb losses now for massive future markets. The hurdles are still regulation, public perception, scaling profitability, but the progress is clear.
Right. Let's transition to the financial outlook and strategic investments. Some interesting spending movements this quarter. Total operating expenses up 20% to $26.1 billion. But the biggest driver was a $1.4 billion legal settlement charge. That's a one-off.
Important context, yeah.
Beyond that, R&D investments up 16%, mainly compensation and depreciation from that expanding infrastructure. Sales and marketing up a more modest 5%. Commitment to capital return remains strong. $13.6 billion in stock buybacks, $2.5 billion in dividends, and they still have a formidable $95 billion in cash and marketable securities. Huge flexibility.
Incredible buffer. But what's really notable and got a lot of discussion is the big jump in capital expenditures CapEx. Q2 CapEx was $22.4 billion. Massive outlay, mostly technical infrastructure.
2/3 servers, 1/3 data centers, and networking.
Roughly, yeah. Servers being the computational backbone for AI. And they updated their full year 2025 CapEx outlook to about $85 billion. That's up significantly from the previous estimate of $75 billion.
Why the big jump?
Primarily 3 reasons. Meeting even more servers, getting servers delivered faster than expected allows quicker build-out, and accelerating data center construction, all directly driven by that surging cloud customer demand for AI compute. They even expect CapEx to increase further into 2026.
That's a colossal spend, nearing $100 billion. What gives them confidence in the ROI for such massive long-term investments?
They expressed very strong confidence, linked it directly to customer satisfaction and the value AI is creating. They cited high customer satisfaction, very low churn rates in Google Cloud, shows customers are sticking around and expanding usage. Plus, the increased value delivered by their cutting-edge AI offerings. They believe that leads to healthy, sustained returns. It's a strategic bet on long-term growth and leadership in AI infrastructure.
A bet that having the most capacity creates a powerful moat.
Pretty much. The risks are managing the scale and ensuring demand continues, but current growth suggests the capacity is needed.
Okay, other factors impacting expenses in the second half outlook. These heavy CapEx investments will keep pressuring the P&L through depreciation, right?
Definitely. Q2 depreciation was up 35% year-over-year to $5 billion. Expected to accelerate in Q3 as more new stuff comes online. Also expect headcount growth in key areas for 2025, with a bump in Q3 from new grad hiring fresh talent for AI and cloud. And Q3 will have the usual expense bump from the upcoming Pixel launch in August.
Standard seasonal factor.
Right. And for the revenue outlook for H2 2025, they mentioned potential for a modest FX tailwind at current rates, but currency is volatile. In Google Services ads, H2 faces tough comparisons. They're lapping really strong performance in financial services from 2024. Plus, negative year-over-year comparisons due to heavy U.S. election spending in H2 2024, especially on YouTube, which won't fully repeat.
So some headwinds there on the comparison front.
Exactly. But cloud demand remains exceptionally high. They expect a tight demand-supply environment to continue into 2026 despite their massive build-out. speaks to the unprecedented surge in AI compute needs across the industry. Demand is just outstripping even their aggressive capacity additions.
Wow. Okay, let's zoom out a bit. Consider the big picture implications. What does all this mean for the future of user experience, the web itself? We're seeing search evolve with AI mode and the Gemini app as different complementary surfaces for interaction. Search stays focused on grounded info retrieval, while Gemini acts more like a personal, proactive assistant for complex tasks like coding or video creation.
That's the distinction they're making, yeah. It highlights a sophisticated multi-surface strategy, allows specialized innovation in each area. Search organizes the world's info. Gemini pushes generative AI boundaries. Long-term, they aim to seamlessly integrate these as user intent becomes clearer, like how text, image, video queries unified in universal search eventually. It's an iterative process, adapting to how users naturally use AI, moving towards an intelligent interface that anticipates needs.
This raises a really important question about these agentic experiences. Will they democratize the web like early search did, opening up the long tail? Or risk more concentration, fewer winners dominating interactions?
It's a complex but vital question. They acknowledge agentic experiences. AI acting on your behalf promise a much better user experience and will likely enable savvier players, big and small, to grow by using these new capabilities. So yes, potential for expanding access and use cases, democratizing task completion. However, they also stressed it's not just technology. Scaling these successfully also requires solving the business models for everyone involved.
The business models.
Ah,
Always key.
right, from AI providers to the businesses contacted by agents to users. So while tech can democratize access to action, the economics and aligning incentives might still lead to some concentration. Depends how those agent-mediated business models evolve. It's a balancing act.
Interesting. What about new devices, form factors,
Yes.
AI pushing beyond the phone?
They expect AI to spur a whole new wave of hardware innovation, specifically mentioned glasses, where they see a dramatic step up in capabilities thanks to AI. Strong belief in that category for ambient computing. The idea of an AI assistant in your field of vision, profound implications.
But the phone isn't dead yet.
Not by a long shot. They tempered expectations, saying mobile phones will remain absolutely central for at least the next 2 to 3 years. So exciting new form factors are coming, but the smartphone remains the hub for now.
Okay. Finally, the AI talent war. How does Alphabet view attracting and retaining top AI talent in this super competitive environment?
Their view is rooted in their long-term investment in AI talent going back over a decade. They believe top talent is drawn by frontier-driving work pushing the cutting edge. Also, access to unparalleled compute resources, collaborating with the best peers, and crucially, the ability to drive real-world impact at global scale. While individual moves make headlines, they stated their overall retention and new talent acquisition numbers remain healthy, still a top destination. They also noted AI resourcing costs are built into the overall structure, and internal AI tools are actively driving efficiencies to help offset these big investments, a positive feedback loop.
Makes sense. All right, so as we wrap up this deep dive, here's something to think about. With AI rapidly transforming how we interact with tech and info, what new skills or literacies might we need to cultivate as consumers, as professionals, to fully leverage these agentic experiences, to navigate a world where AI isn't just answering, but acting?
That's a great question. Perhaps the most valuable currency won't just be data or even the answers AI gives us, but rather our ability to frame the right questions for our AI assistants, and critically, to thoughtfully evaluate the sophisticated responses and actions they provide. The power shifts to our ability to prompt and to discern.
Food for thought indeed. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.